Hello folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade, and welcome to our daily fundamental video analysis. In the economic data front, we had another appalling reading from the biggest economy of the Eurozone, and I'm speaking of Germany. The German industrial production number failed to impress market, and hence we are seeing weakness across all the major European markets. If you see in the chart, the DAX index has primarily trended to the downside since morning, and that is the dominant trend. But speaking of this dominant trend, if you look at the overall picture for the DAX index, there is no doubt there's an ample amount of support from the ECB's PEP bond purchase program, which is really fueling the market for all the European indices. Because as we've discussed previously, when it comes to momentum, there is no other index which has the strongest momentum as the DAX index. This is despite the fact that we have seen some stellar gains for the Nasdaq index, the tech heavy index over in the United States, and of course the S&P 500 and the Dow Jones index. But the reason that the DAX index has seen such a massive momentum is because nearly 60% of the DAX index stocks are trading above their 100-day moving average. So that is really driving the momentum for the equity market. But overall, on the economic front, we had another echo of a good economic numbers from the United States, because yesterday we had the US ISM manufacturing data, right? So what this data confirmed was that there was no coincidence. The last week on Thursday, when the unemployment rate fell from 13.3% to 11.5%, was any sort of an accident, or there was an error in the data, because the US ISM non-manufacturing data, the PMI data, increased to 57 against the forecast of 49. Now that is obviously a very enormous jump, but this positivity is not really feeding into the markets today, and as you can see in the chart, the Dow Jones index is in battle once again with its 200-day moving average. Now for me, the major concern is that if this price falls below the 200-day moving average, perhaps once again we're going to continue this consolidation pattern or some sort of a weakness, or the least we're going to see weakness in the bullish trend. And of course that is not what we want to see, because we have already formed a higher high this week in comparison to last week. Now lastly, in the commodity space, gold prices have made 8-year high. We've touched the critical level of 1793. That is very important with respect to the 1800 target that we have talked about several times. I think the doors are still wide open for the prices to go beyond that level, that key resistance level, the 1800 price level that we have talked about several times. That's all for today. See you guys tomorrow.